What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered.
What's up, everybody? Welcome back to another episode of the CPA Zone. I'm your host, Ryan Pulis, and today we're diving into a topic that comes up all the time. Limited liability companies, or LLCs. Why are they so popular with real estate investors and small business owners? Let's find out. So, first thing first, what exactly is an LLC? An LLC is a legal business structure that provides liability protection to the owners, who are also known as members. It blends the best of both worlds. So you get the liability protection similar to a corporation and the tax flexibility of a partnership, possibly an S Corp, C Corp, because an LLC can make elections to be taxed as any. So an LLC is a great starting point for your business when you're just starting out. Much better than starting as a sole proprietor or a general partnership, because A, you get that liability protection, and B, the LLC has the flexibility to be taxed as an S corporation or C corporation. So a single member LLC by default is going to be classified and taxed as a sole proprietor. A multi-member LLC by default is going to be taxed as a partnership. Either of these, a single member or multi-member LLC, can make an election to be taxed as an S corporation if they'd like to, or a C corporation. Now, one thing I will say, if you are starting off in real estate, you're not going to want to hold your real estate in a C Corp or an S corporation. Best bet, generally start with a single member LLC. Now, if you're putting a deal together and you have multiple investors, then you're going to go towards the multi-member LLC. One thing to be careful of, I see this a lot with married couples, is they want to own everything jointly. So then both husband and wife will become members in the LLC, which in most states, that's going to trigger a partnership tax return. So now you're going to have an additional tax return to file. Partnership returns are far more complex and expensive than an individual return in most cases. So typically, it's going to be best to keep it in one spouse's name. Let them be the owner in a single member LLC. Keeps things a bit cleaner. It's all going to flow through to Schedule E on your personal income tax return. You can avoid that partnership filing. It's just something we see a lot. It triggers unnecessary filings and expense when it's not necessary. So let's talk about now, why do real estate investors like LLCs? So reason number one, liability protection. So when you own rental properties in your personal name, you're putting all your personal assets at risk. If a tenant sues you, they could potentially come after your house, your car, your retirement savings maybe. But if that property is owned by an LLC, the liability is typically limited to the assets within that LLC. So it's a nice peace of mind. And obviously, you should also carry adequate insurance. Make sure you're covered there, because you don't want to lose your property if something happens. But the LLC really provides that additional layer of protection. Reason number two is pass-through taxation. Unlike corporations that have double tax, in the case of a C Corp, LLCs generally going to enjoy the pass-through taxation. That means the profits pass directly to your personal return. You avoid that corporate tax layer, which comes into play with C corporations. And for many real estate investors, it simplifies the tax filing, can lead to better tax savings. And again, as we mentioned before, for real estate, you don't want to hold real estate in an S Corp or a C Corp. It's a real pain getting it out. It raises tax issues. Much better staying in an LLC. You have much more flexibility. Your operating businesses is where you want to explore using possibly an S Corp or a C Corp, not withholding your real estate. On to the third reason, it has a sense of professionalism and credibility. Using an LLC can signal to tenants or investors, lenders, that you're taking your business seriously. You have to operate it as a true business. However, it kind of gives that impression of credibility up front, and it separates your personal and business dealings, which is a big plus when you're trying to scale up your portfolio or build strategic partnerships. Always remember, keep your business and personal things separate, no commingling of funds. So let's talk about a few nuances here. So one thing we see a lot with real estate investors is to hold each rental property in its own LLC. Now, if you're dealing with big properties, probably the best way to go. That way, if there's a lawsuit involving one property, it doesn't put your entire portfolio at risk. However, just know multiple LLCs means more administrative work and potentially more fees you're paying to keep each LLC registered in the state. Generally, those fees aren't too bad. California is a bit rough at $800 per LLC entity. But with larger properties, it's just the cost of doing business. However, others they use a strategy where they kind of look at a maximum asset value and hold multiple properties in a single LLC up to a certain point. I don't know, maybe that's $1 million. So if you have a few properties that are less than $1 million, you put them in one LLC and then you have a maximum asset value threshold. We've seen people do it that way. Others may focus on geography, using a separate LLC for each state they invest in, for example. And we also see what is pretty common is they're using a holding company in a investor-friendly state like Wyoming or Nevada. And then there are subsidiary LLCs set up in the various states where the real estate is located. Now, as you can see, there are many options here. So it's best to discuss this with your advisors and come up with a plan together. But again, it just kind of shows you how many options are out there for using LLCs with your real estate. Also, LLCs, they don't automatically provide tax benefits just by existing. I've said this before. I'm sure I'll say it again. There's no tax benefit by using an LLC. The LLC is really used for liability protection, but you still need to have a solid strategy. For example, electing to have your LLC taxed as an S Corp might make sense at a certain point for your operating business, but again, we don't want to hold real estate in an LLC that's taxed as an S Corp. If you're flipping properties, an S Corp would make sense. Now here, a quick piece of advice is just always consult with your CPA and attorney before setting up an LLC. Make sure you've considered all of your options and you're doing things the right way up front. It's much easier to do things correctly up front than try to fix it later on down the road. Now, if you're setting up your LLC, the first thing you're going to do, this is going to kind of talk through the steps to do this very quickly, is choose your LLC name and check its availability on your Secretary of State website. Or the Secretary of State equivalent for your state. Next, find a registered agent. So this can be, they're usually law firms like InkFile or LegalZoom, CorpNet, that they act on your behalf. They use especially if you're investing out of state, you're going to have to use one. They give you a presence in that state so you can operate your LLC in that state and maintain a presence there. Next, you're going to file your articles of organization with the Secretary of State or its equivalent. So this is the document that officially creates your LLC. Next, create an operating agreement. Even if you're a single member LLC, this document outlines how the business is run, and it's essential for banks, business partners. This is not a DIY step. You don't do it yourself. There are all sorts of online tools with templates. You don't want to use one of those. In this case, pay an attorney to draft a good operating agreement. You don't want to use the cheap online templates. You want to make sure everything's set up correctly and you're really protecting yourself. Next, you're going to apply for an employer EIN with the IRS. So just be careful here how you list the owners, especially if you're a multi-member LLC. Make sure you're doing things correctly and choosing the correct entity type. Again, you may want to have your CPA or attorney do this for you. Next, you're going to open a business bank account using your EIN. They'll also request a copy of your articles of organization and operating agreement. And then your LLC is up and running. And after that, maintaining your LLC just as important as setting it up. Make sure you're complying with the state-specific requirements like filing annual reports and paying the fees. And again, just one more time, remember, don't mix personal and business finances. Keep your records up to date after major changes and don't miss those state filing deadlines. So that about does it for today. Thanks for tuning in to the CPA Zone. If you found value in this episode, Don't forget to subscribe and share it with another investor or entrepreneur. If you have questions about LLCs or other tax strategies, go ahead and leave us a message in the comments section. Until next time, have a great day. One last thing before you go. We have put out a free ebook for our listeners. You can find a link to this in our show notes. It's called the Rental Real Estate Investor Tax Guide and covers all the basic tax-related information for real estate investors. We hope you like it. Again, go to the show notes to download your free copy. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's ThePulicegroup.com/contact.